So better than expected. Trade balance was expected at negative 60.5 billion. It came back at negative 57.3 billion. The big move here is in the Fed Fund futures. The Fed Fund futures had been pushed all the way out to December again, and we're actually at 42.1 earlier this morning, and you can see now they're at 40.4. And so this table needs to be longer. The pop in the crude oil futures price has pushed the Fed Fund futures out and is almost pushing it off the table here of the CME Fed Watch tool. And what that would mean is that the Federal Reserve is would be forced to stay higher for longer and not cut interest rates as we move forward. Now, as far as price action goes, inside of our leading indicators, the dollar has a pullback that it can make before lifting off into a continuation of our trend. This is a dollar strength trade, but in the intraday timeframes, what we're watching for is a pullback in the morning. Now, this dollar pullback would correlate with the indices squeezing into the direction of the half gap fill and the bank chart squeezing back up into a 50% short. We're going to see where we open up here in a moment. And the VIX pulling back into a long from lows. One thing that you'll notice, though, is that what did the VIX run into here as we're going into our pre-market time frame? Well, it ran to a halfway back short for the week. And so not only is there a counter trend squeeze on the indices from an inverse long from lows of the week to highs of the week. Look at where we bounced almost perfectly off of the lows of the week to highs of the week. The support level, the actual 50% level, is a 65.0350. What is our low down there? Our low down there is a 65.0375. It was front run by one tick. So we're bouncing off the halfway back long from lows of the week to highs of the week. And as we were going into the morning, we were kind of asking the question, well, there's a potential for a counter trend squeeze into resistance, but we were bouncing off of support in a full retracement long from lows. And when you take into that context of the longer term time frames, we're going to go to a 12-hour chart here. What have we had in most of our counter trend rallies into resistance over the last, say, 5 to 6 weeks? Well, there have been halfway back longs from lows that have led us back up into resistance. So the markets are extremely bearish this morning, and rightly so. As far as the going into a weekend and wanting or needing protection from a downside risk event going into an extended holiday weekend. But in the intraday timeframes, there's not only the possibility for a squeeze into resistance, we're bouncing off a perfect 50% retracement long from lows. So it's going to be an interesting morning here. Now, as far as the kind of idiosyncrasies that we have inside of our broad markets, as we go into these types of massive pro gap down, we're in a pro gap down and go situation here this morning. We do not have an expectation for a full gap fill. There's not an edge leading us to the full gap fill. Not an edge. It's only a 59% on Thursdays, 56% over 90 days, 50%. Even if we were inside of the 20 handle, there would be still not an edge on the day of the week. Now, inside of the 20 handle, there might be a 67%, but we're not inside of the 20. We're not inside of the 30. We're out. This stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.